Well, hello folks out there in YouTube land. Got a big show lined up for you, and let's get right on into it. All right, let's pull up the screen here. The Plnhf 13 out in Vegas and California and Florida and Chicago, you name it. Important acquisition they made out in California. We're going to talk about that. We're also going to talk about why the Plnhf is dropping. And also we're going to discuss stock-based compensation. All right, but first we need to talk about what's going on in the world. We've got inflation at 7.9%. We've got gas prices skyrocketing. We also have the Ukraine situation that's playing a role in some of that. And it doesn't appear to be getting a whole lot better. If you've been to a grocery store or anything along those lines, it's ridiculous. And it's a bait and switch too. And what do I mean by bait and switch? This is exactly what I'm talking about. These are brand new paper towels. Look at the size. This is unopened as far as never been used. All the sheets are there. Here's an old one. What's the difference? This is the new one. Here's the old one. And this costs more. So there you go. Add that crap up. So not only are you paying more, but you're getting less. So it's a double whammy. So that's going on. And Plnhf's not dropping just because of the things we're going to talk about today. It can be a lot of macro issues because every stock's down. But we're going to talk about some things that are directly affecting the Plnhf. Gas prices being one. But let's also realize the Rona appears to be going away. And here, as you can see, we're down to 47,000 new cases, 7-day average of 38,000. That's down from around 1 million. So that is just fantastic. Look how low that is. So that's great news for the future. So there is something significant and positive. Also, the Plnhf has completed an acquisition of Next Green Wave, which will be vertically integrated in California. So the reality is the Plnhf out in California had to buy from other people and other companies to sell their product. They couldn't use their own product because they can't go across state lines from Vegas. So they needed to buy a company so they can be vertically integrated and be able to not only produce the stuff, but sell it. And that, of course, drastically affects margins, which they have good margins at the Plnhf in Vegas. They do not in California. So this, in my opinion, is a great move. And here, Larry Scheffler, who's the co-CEO, said the closing of this transaction significantly improves our position in California. It empowers us to improve margins through vertical integration at our store, enter the wholesale market with our portfolio of award-winning products. See, now they can get their own products that have been very successful in Vegas, and gives us an experienced management team and foundation to continue to expand in California. So I think this was a fantastic move, and I was wondering when they were going to do this, because you know they're wanting to continue on with the exact same plan they have in Nevada. So that's all positive. Now let's talk about the negative, other than the obvious inflation and all that. Let's talk about stock-based compensation. Now here is the first quarter from Plnhf 13, first quarter of last year. They did $23.8 million, and they wound up with a profit of almost $500,000. And if you look down through here, they had $203,000 worth of stock-based compensation. That, that's not that much for $23 million. That's not unreasonable. That's, decent. Nothing crazy. Then let's go to the next quarter. And here you can see through June of last year, they did $32 million. So $10 million more dollars. So you would think that that profits is going to be quite a bit better. Now realize they did have expenses from opening in California, and they didn't have any revenue from it. So that was obviously going to negatively affect the profit and loss statement. But let's look down here. They had an income loss of $4.4 million. But whoops, wait a minute. Stock-based compensation went to $5.3 million, from $200,000 to $5.3 million. How much is that? 25 times? Something like that? 2,500% increase? Now let's look at Q3. And here we are through September. We haven't seen the fourth quarter yet, but $33 million, another great quarter. And I'll be dogged. Stock-based compensation expenses, $6.6 million. So it went up. It went up. And of course, they had an $8 million loss. So most of that was the stock-based compensation and the depreciation and amortization. Now, these are non-cash events. They do dilute the company, the stock-based does, but it's a non-cash. It doesn't affect cash flow. But if you add those two up together, that's your loss. And a big part of that stock-based compensation. Good gosh, terrible lighting. I'm going to fix this lighting. The sun came in. All right, you can probably see me better now. It got sunny all of a sudden. All right, but anyway, now understand when a company goes from profitable and the revenues go up, but then they start showing a loss, that's going to cause alarm bells, and people are going to go, well, this is now a non-profitable company. They're not going to go in depth and go, oh, well, this is stock-based compensation. It's not a terrible expense that they can't control. It's something they have total control over. And maybe this is something that's short-term and they can turn off and on when they want to. They're not going to look at it that way. They're just going to go, oh, it's losing money. And it's a penny stock, basically, crash. And that's not helpful. Now, it still would have gone down because everything's gone down, and I'm not blaming it totally on that. But if you don't think going from a profitable company to a loss based on stock-based compensation had played a role, I don't know what to tell you, because it's not good. It's no bueno. And as we look at this stock, as you can see, it's just been heading down and down and down, and even went down below this support, which is way back here. This support is from July of 2020, almost 2 years ago, and it did break through that today, and now it's sitting down at 237. Let me see what the new support would be. It's going to be like $2.20, it appears to me. Let's see. Let me get this put in. There you go. So now we're looking at support of 219. So that is not good, and that's making a lot of shareholders angry, very angry. That's right, angry as that guy. Now, I would love to have them talk about that in the conference calls. They don't even bring it up. You know, you would think something that went up 25 times as far as an expense and took you from a profitable company to an unprofitable company, that would be discussed in the conference call. Questions would be asked. They'd answer them. You know, the CEOs would say, this is why this happened. This is who's getting it, whatever. Nothing, absolutely nothing. There's no discussion of it. And, you know, I'm wondering if you do ask the question, are you going to get this?
These aren't the droids you're looking for.
These aren't the droids we're looking for.
Yeah, for some reason they're not wanting to talk about that, and I think it should be discussed. Anyway, it's very frustrating because I really like this company, and I think it's well run. And I think that Vegas store is amazing. The California store looks good. I know it's going to take time to build that up, but I think this new acquisition was excellent, fantastic. And now they've got the big license in Florida. They're getting ready to do a deal. Well, they're doing a deal in Chicago. So this thing's going to grow like crazy. You know, hopefully over time it turns out to be a great investment. And I think it will be, but this stock-based compensation is really aggravating. And I wish they would discuss it so, you know, we can understand why it went up so drastically. All right, folks, and that's Planet 13. And I feel a little bit like this guy right here. I'm not real happy about it, but I am happy about this acquisition. And hopefully this thing turns around with the Rona going away. I think that's going to help Vegas a lot. I am concerned about inflation like everybody else, but there's not much we can do about it right now. We're just going to have to kind of hopefully this Ukraine thing will eventually end, hopefully sooner rather than later, and that'll help some. It's not going to solve all the inflation problems, that's for sure, but it'll help some. And that's Planet 13 today. If you like this content, be sure to hit that like button. Lets me know to continue to cover Planet. And if you feel like this guy, well, me too. Anyway, I hope you did like the content. And we'll see you next time on Mr. Frugal Investor.